Welcome, Alex Corpolongo to Closers Club 11. Take it away, my friend.
Okay, cool. Again, thank you guys for having me. Yeah, I'm Alex Corpolongo. I joined the group, I guess a little bit over 2 years ago now. Beginning of 21, I think first quarter still 21. And it's been awesome being with you guys. That's why I love every opportunity I get to hang out with you guys, specifically hang out with the group, talk to the greater group, as a whole. So yep, closes Club 11. What an honor. And my company is Raven Real Estate Acquisitions. As you can see here, I'm over in Tampa, Florida, buying multifamily deals.
Let me jump in real quick because I have a couple of little stories that I like to share about Alexander Michael Corpolongo. The first thing is he's a native of New York. He lived in Somers, New York, and I used to live in Mayapack, New York. Jake, he never went to the restaurant. He never crossed the border and never went to Gino's Trattoria. Can
He
you
was
believe?
eating. He was eating healthy, probably, Gino.
That's not good, Alex. He didn't know me back then. I mean, he had to join Jake and Gino to meet Gino from Gino's Trattoria in
He could
Mayapack.
have got the Jake's chicken though. He would have been all right.
And the second quick story, everybody, for those of you out there that think it's not the right time or that I'm too young or that I don't have enough experience, Alexander joined when he was how old? He was 26 years old. He's currently 28 years old right now. He's got over 200 units in what market? Tampa. It's such a hot market. There are no deals. So right now,
Bigger than Orlando, bigger than Jacksonville.
Right. Tampa's a huge market, but
Yeah.
Joining at the age of 26, I think the difference between Alex and a lot of people who are thinking about it, he had a goal, he had a vision, he had focus, he knew he wanted multifamily. He just found the right community, joined the right community, got the right education, and took massive action and put in a ton of work. Because those first couple of years, he came to every single event, networked with every event. He met a lot of the students. He started building a syndication business, started talking to brokers, and before you know it, 2 years later, he's 240 units and he's on CC11, my friend.
Making it
Yep.
happen.
Yep, feels surreal to be honest, but it's an absolute blessing. And I guess I'm not surprised. It's incremental kind of progress along the entire journey. But I was ready to do this. That's I was jumping 2 feet into it when I was joining this community. It's I basically, for people, Gino, you just gave me a little bit of background, but for people who don't know me, yeah, I came down from New York. I mean, this, you could see here on the slide, my one little fun fact about myself is that I played professional lacrosse before becoming a full-time multifamily syndicator. Basically spent my whole early life doing that, among some other things, but really, really committed to that. Lacrosse was more or less my life growing up. Wanted to be the best lacrosse player in the world, and went after it every single day. Couple injuries later, that was kind of like a fleeting pursuit, and I started stumbling into multifamily real estate just by chance. And a couple struggling years in New York trying to do it, and taking my licks, learning, not buying any properties yet, but taking my licks in the learning process, kind of, figuring out small things along the way, figuring out what market I wanted to be in. Eventually, at that point, landed on Tampa, Florida, after seeing all the analytics here, and then spending a long weekend down here and seeing just the incredible growth that was coming our way down here. Packing my bags, shipping down to Tampa, Florida, and I thought, okay, I've relocated myself geographically. What further can I do here to make sure to eliminate the possibilities of me not succeeding in this game? And that was joining a group like this. And after interviewing with a couple different groups, really getting to know you guys, getting to know what this group was all about, became an obvious decision for me. And I was able to take all of that passion that I had at the first 25 years of my life from lacrosse and throw it into this. Has just been the absolute perfect fit for me, and a saving grace, to be honest. So yeah, here I am. And like Gino said, over the past 2 years, have accumulated 240 units down here in the Tampa Bay. And I wanted to take you guys through one of the most recent ones, one that was just closed on June 28th of this year. So I guess before getting into that, the deal specifics is me joining Jake and Gino officially was okay. Yep, relocated myself geographically, kind of doing all the little things, you know, I had to be able to get this first deal. And what was I really figuring out that I was limited in was looking at the deal size that I could realistically acquire and be looking at, right? So, you know, wanted to make sure that I am opening up as much possibilities to get that first profitable deal as possible. And that wasn't necessarily going to be, and I'm not going to say that it can't be found if you're looking in the 2 to 12 unit space, but the wider you could, you know, expand that range of the deal size, that kind of, I guess, the down payment size you can put down on a property, the more likelihood, you know, the more shots you get at getting that first deal. So my deal size was highly limited because of the amount of capital that I had to put into a deal, and therefore that limited my deal flow. So I wasn't finding that right deal. And then joining the group, I was able to, through all of these events that you guys put on, these networking events, all these closers club calls, MM6 coming up, like all of these opportunities is one of the reasons why you guys bring so much value to people like me, all the people on this call, so that people could intertwine, network together, connect, communicate, and fill those gaps that all of us have, right? So that was,
it's a team sport, I think is almost what you're saying, right?
for sure. Yeah.
And I think the other thing before you move to the next slide is the accountability piece, Alex, because when you're younger, you're out in Tampa by yourself. If you're on an island, it may be hard to get going. It may be hard to say, you know what, I'm not going to call the broker today. But when you have those accountability pods and you have groups and you have people looking at you and saying, hey, let's make it happen. All of a sudden you hold yourself accountable, but the group and other people are holding yourself accountable. That A field, all of a sudden you're saying to yourself, I can't let them down. I've got to take my chance, and I've got an opportunity here. And I think that's one of the things that really separates people who are not successful versus the ones who are successful. They find a way to hold themselves accountable to put in the work.
Yep, absolutely, no doubt. And constantly, stepping your game up to be performing for those people that you're surrounding yourself with. So
and Jake, I got to tell you, before he puts his deal up, you're going to love the deal. This is, I mean, when I saw this deal, I'm like, yeah, baby, let it rip. Let's share this deal.
Yeah, so there it is. I'm not sure if
it's because of the palm trees, right?
Yeah, you got a little palm trees.
Yeah.
but dude, let me tell you, let me preface this by saying it's a 23 unit deal. It's in Tampa. I can let Alex know that he's got a couple deals down the street, but you're looking at $925 average rents. These things are at $1,800 right now, Jake. He paid $130 a door. I'm getting ahead of myself because I'm so excited.
He just stole his thunder, man. Dude, that's his show.
No, you know why? I'm excited because everyone's always saying these small deals, go to big deals, go to big deals. The small deals make so much sense. There's so much value in these small deals. And you do one of these small deals, you get into the bigger deals. And what Alex has been able to do is been able to really grow a base in Tampa. And all of a sudden he has these opportunities, and there's so much more meat on the bone on this thing. So Alex, I'll let you take it away.
Yeah, absolutely. And you're totally right. You know, I'm doing deals that are, you know, I've done deals recently that are quite a bit larger than this deal here, but this deal gets me just as excited, if not more excited than any of those, just because of how much juice there is on this thing. So the criteria, I mean, in short, you know, everybody has the different deal sourcing criteria. I'm doing a lot of, basically everything that I'm doing these days is an off-market strategy. Whereas I'm working with some people to get basically an inventory of all the deals down here in the Tampa Bay in the footprint that I'm targeting, and I'm going after them. And I'm finding them and I'm driving them in person, just like this one. And what do I see? First of all, this is in a great location, first of all, in St. Petersburg, Florida, which is one of the best markets in the country for the past couple of years and still is. And this deal looks what I would call pretty boring, you know, and I look at this, I'm like, okay, that's probably somebody who's owned it for a long time. And I'm guessing that rents are way below market here.
It needs a little lift.
That's it. Right. Yeah. Exactly. And I come from the construction. My whole background is in civil engineering and construction management. So I look at this and I see, I mean, what do I see? I see some people might see something that just looks totally boring. Parking lot's a little bit worn down, paint's old. What do I see right away is I see a concrete block, 2-story structure with hurricane-proof windows on it that needs a facelift. Like the bones are there. It's beautiful. This is beautiful to me. So, and what do I suspect? I suspect that rents are way below market. So I think that there's probably a lot of opportunity there because this owner might not know exactly what he has, right? And what you guys can see here is I'd have to zoom in is there's a sign on it that says Monterey Apartments with a manager's name, Greg, and a number on it. So I call the number's disconnected. And I'm like, okay, well, this is, I mean, I'm sure of it now. I'm like, this is okay. It's
totally professional operations going on there is what you're saying.
That's it. Exactly.
Yeah.
So I snoop around a little bit more to get the correct numbers. I'm not going to let you guys know how exactly I did that, but you guys got to find your own methods. Basically, is what I'm saying. You got to be resourceful in finding these opportunities for sure. And the only reason why I'm not going to tell everybody exactly, walk you through the individual steps of how I do this. I don't want to rob you of that opportunity. Your acquisition strategy is what you're allowed to make yours, and then you own it, and then it succeeds because you had to go grassroots and take it to exactly where it ends up, where it succeeds. And now Jake and Gino are, generous enough to be giving out all these strategies that like intense, coursework that could take you from zero to hero in the multifamily space. And that process, as you grow as a multifamily syndicator or however exactly you're going to get involved in this multifamily business, is kind of, truly a special journey. And I encourage everybody to create their own strategy, their own process behind acquiring these things.
So we're going to talk about the buy right, the manage right, and the finance right. So right now, your buy right criteria, this is checking all the boxes for you. It's boring, great market, great location. There's a lot of value add opportunity. I'm sure you looked at median income. The manage right, you know what you're going to do with the manage right. We're going to go through that, and the finance right. So if you're looking through that process, look at every single deal through that process. And like Alexander said, his buying right criteria is going to be different than yours. If you're up in Cleveland, Ohio, or if you're in San Francisco, California, you have different buy right criteria. You may be older than Alex. You may have more capital. You may have less time, whatever that is. Try to figure out what your buy right criteria is. Now, that's what we teach at Jake and Gino. It is the framework. It really is that process, and understanding what the process fits to you is one of those important components.
But Gino, the process works when you apply his hunger. That's the thing. Like if you want to go out and make it happen and take his tenacity to this, you're going to be very successful. But that's the thing. You take that education and the action and the fire in his belly, and that's when you see results like this. So
let's jump into this deal.
Yep. So, a couple of these high-level analytics, like Gino covered, 23 units, I found out $925 average rent per unit. I didn't find that out right away.
You had a knock on each door, probably, right? There's not a spreadsheet with that information on these deals all the time, folks. Just going to be honest with you.
Yeah. So yeah, but then the kicker on this is, okay, what do I know that the neighbors are renting for? So there's other multifamily properties surrounding this in this area that are renting for same units. Like a 2-bedroom here is going for under $1,000. 2-bedroom there is going for $1,700, $1,800, $1,900 a unit. Right.
Yeah. And this is important, folks, because Alex is not creating the market rent. It's an average of what everyone is charging in the area. So he will know the value of the rents for this property. And what happens with these smaller mom and pops, like you see here, is they get lazy. They don't treat it as a business. The rent falls behind. The units themselves usually fall behind, and they look a little drab like this, or boring, as Alex would say. And it takes an operator to come in with professionalism to clean it up, and that's going to cost money. And that's where the increase will go from current rent that's below market to what everyone else in the market is charging.
Yeah, exactly. And let's jump there, because here's the details, and here's some photos to the right-hand side.
You love that concrete block, don't you?
I do love it. I do love it. Basically, everything I got is that concrete block. And so
you didn't tell me there was a water park.
Yeah, nice little pool area that we've revamped a little bit here.
Looks nice.
But this is what So last slide, you see something that looks a little boring in these early photos here of this looking at these photos originally of this here, right here, if you could follow my cursor, of this dated kind of pool area, chain link fencing surrounding the pool, super uninviting pool. There's nothing wrong with the pool. It's just dirty. Nothing's
Why is it
painted.
yellow?
Yeah, it's just dirt. It's just neglected. It's got a pool contractor that's not under contract. It's his buddy who lives down the road who comes and checks it out at once
The
a month.
pavers you added look great, by the way.
Yeah, so I've and kind of, everybody could kind of do it however they want, but I've done very similar upgrades to this here in this bottom right on the last 3 deals that I've done.
You're kind of like your renovation plan going and just applying it to everything, right?
Yeah, exactly. And so what does that allow me to do? It allows me to lay my eyes on that property that looks super drab and see what it's going to look like in X amount of time after I take it over. So basically, buy right criteria, right? Come in, you see the property for what it is, you see how it's operating now, you figure out that concept, that proof of concept wording that we hear kicked around all the time. And some people think you always need to create that proof of concept yourself, right? Some people hear the word proof of concept and they're like, okay, well, 4 months into the property, now I got my rents here, now I'm showing proof of concept. That is proof of concept, but you could also, as Jake was alluding to, you could allow your neighbors to create that proof of concept for you. Right? If you come in, you're just scoping a property out and you figure out that the neighbors are renting for $1,800, that is proof of concept right there. If it's a similar asset class, similar type property, a good comp, there's your proof of concept right there. So what's the property operating at now? What do you need to do? How much money do you need to put into it to get it looking like it does here in the bottom right? And in this simple kitchen upgrade we did here, and that's what my civil engineering and construction management background allows me to do, is put a definite, precise budget together that's going to get me here, and then figure out what you could pay for it and operate profitably at whatever your specific criteria might be.
Let's take a look at this real quick, because you have the buy right, you're buying concrete block, you're buying older assets that need a little bit of work with a value add component, with rents under market. You're managed right, you're going in there, you're fixing out the exteriors, you're doing some pool work, getting rid of the ugly chain link fences, you're fixing the exteriors. In the interiors, if and when they need it, it's between $5,000 and $10,000 per unit. That's your managed right. Now your finance right, which you haven't touched on, which I'm pretty much drooling over there, it's a 70% loan to cost. So you're getting 70% of the proceeds of the loan. Where do you get the money from? I need money from multifamily. Well, you can find a lot of ways to do money in multifamily. You're syndicating this deal, raising some of the capital. The bank is a huge component to it. A 6.5% interest rate, fixed for 5. So you didn't do any kind of bridge debt. You've got long-term fixed rate financing. So you're taking that risk off the table. So I know Jake, when I was telling you, joking around, that Jake would love the deal, that's the third component that he loves it. It's buy right, finance right, and then as you're executing that manage right, all 3 of those components come together in the process in that 3-step framework, and then magic is made. You're going from an asset that you bought at $130,000 per unit, which I think will probably accelerate to $180,000 or $190,000 per unit when you're going to get the rents up to $1,900. Mr. Cenziano, want to add anything to that?
I just still can't get over the yellow pool. Like, there's just no one's going to want to go to a pool that looks like it's got pee stain on it. I'm sorry. And that's a huge, curb appeal upgrade there. So well
that looks awesome. 20% IRR. Well, what's the next slide? Are you talking about in the next slide as far as exit strategy or as far as what's more to come? Yeah. Excellent. So let's talk about the exit strategy on this asset for yourself.
Yeah, I mean, exit strategy. I'm always looking. My buy right criteria happens to be, creating value. These are value add deals, so it's all about forced appreciation on these things. So the plan is to own this thing, renovate it, refinance it, ideally, and hold it for a while until the market's absolutely ripe to sell it, and to make those financial decisions, when it makes most sense to, because we have this long-term financing. And so what are we going to do now? We're already, we've done within 40 days, we sealed the roof, painted the property, revamped the pool area, new fencing, And we're getting ready to finish our landscaping up on Friday. I mean,
You're kicking ass, man.
Yeah, I mean, we're 2.5 months.
What was the unit mix again, Alex? I missed that. What was the unit mix on these?
It's 1s and 2 bedrooms, so it's 10 1-bedrooms and 13 2-bedrooms.
Cool.
Yeah, so we've already renovated. We're actually finding that more tenants than we expected are actually staying for increased rents, but not necessarily all the way to where we're going to take it when we've renovated these interiors. But we're that's what happens when you're in markets like this with neighbors like we have, is you bump rents up a little bit. People are either glad from the beginning because they see the work that you're doing and they're really happy to live in this community now that's totally revamped, or they're temporarily a little bit uncomfortable, and then they look down the street to see what they could rent for down there, which is way more than they could, than they'd be paying if they stay. So we're just gonna, increase rents, get our operations, get our expenses as dialed in as possible, increase NOI as much as we possibly can, and hold it, and then make those financial decisions, like I said, when it makes the most sense to. When interest rates are a little bit lower, when we could get a beautiful refinance, or just sell when it makes the most sense. But
Alex, what's going on with the insurance? Someone asked Perrin, hey, Patel, how we doing, brother? The insurance per door on this. What did you underwrite for on this deal?
I think I underwrote for 17. I think originally I underwrote at 17 or 1750, and we ended up closing at 1450 a door on this.
Wow.
Man, no joke. That Florida insurance, huh? Holy cow.
Oh yeah. Yeah, no doubt. I think it's curbing a little bit here. I just did a insurance renewal at another property, and it didn't spike as much as I planned to. And I've got a lot of these relationships in this area with insurance agents who are starting to note that. I mean, it's hopeful for sure, but like I said, I just renewed an insurance policy that had it was like this is going to sound huge to everybody, but from a year ago, it was a 14% increase. Whereas there's tons of properties around here in different markets within Florida that are over 100% increases on insurance. So it's serious, but we'll see where it goes.
Perrin's also asking, is this a syndication or JV? This is a syndicated deal, correct? You got investors on this deal.
Yes. Yep. Syndicated.
This is an excellent deal. So looking at it, you want to look for another boring concrete block property. You want to continue to build a team. And what's really great about it is you have a couple assets right down the street. So you're actually building the scalability and the infrastructure within the market. And I think one of the things that you did really well early on was you just did door knocking. You started building relationships. So you really understood your submarket. You really went in there. You understood values. And that's the thing, Jake. You always talk about focusing on a certain market, being a master, knowing that when this person has $900 rents, you know where you can take it to. It's just quick execution. You know exactly what you need to do. Are you going to be at MM6, Alex?
Yes, I'm going to. If you're going to be at MM6, I'm going to be at MM6, Gino. Yeah,
all right.
I've been to, I think, at least the past two, and they've been incredible. And I've met more than one person, each year that's ended up being either a partner of mine, investors of mine, people I've worked with in brokerage and insurance. You're going to meet the right people at these events. And so I will certainly be there. I'm looking forward to it.
Excellent.
We bring the vendors, right? That's the thing, want to make sure folks are getting taken care of if they're, taking time out of their busy schedules. So for sure.
Yeah, absolutely.
Alex, can you share
New York's coming out there on the chat, Yes. Yeah. Syndication, Vanessa.
Yes. Let's look at Raven. I mean, if anyone wants to reach out to Alex, has any specific questions, it's alex@ravenreal.com. There's his phone number, a nice Westchester phone number right there. There's his website.
That Raven's looking for little notes on the door that say call Craig.
Listen, hey, listen, it's been an honor and a privilege to have you on here because I know you're crushing it. I know you're putting a lot of work into this. For anybody out there saying it's not the right time, it's not the right market, everything's crazy. He started 2 years ago at what we would probably say was at the height of the market. He put in a ton of work, he put in a ton of passion. He really learned the market and he understood the process and the framework of buy right, manage right, finance right. And now he's at 245 units, looking to hit 500. I'm saying in the next 2 to 3 years. So congrats, brother. Appreciate it.
Yeah, appreciate you. The pleasure's all mine. And yeah, last thing I'll say is for anybody who's kind of teeter-tottering, oh, I'm not sure if, you know, I'm ready to jump full into a group like this or to commit to MM6, for example, right now. There's going to be a lot of opportunity coming up. And if you're fully ready to commit, you can take advantage of that. So I would encourage you to do it. And again, thank you guys for having me.
You know how they do that? Go back to the previous slide. Can you go back to that previous slide? If you're ready to commit, book a call with the team. Get out that QR, get out your phone, take a picture of the QR code, and schedule a call with Scott and with Dylan. Thanks, brother.
Yeah, thank you guys.